Hey, Think Realty, thanks so much for being a part of the podcast today. Whether you're watching or you're listening, we always appreciate you being a part. My name is Eddie Wilson. I'm the founder of Think Realty, third generation real estate investor, and love to bring you content and guests that make your real estate investing easier and also faster. And also, you know what, with less risk, because the more information you have, the less risk you take on your real estate investment deals. And so for all of you out there in Think Realty land, we know we've got thousands and thousands of real estate investors, and that's what we want to do is make your life easier and help you find greater returns on the investments you're making. Let me say a quick thank you to our property management sponsor today, which is Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. That's realpropertymgt.com. All right. Our guest today is from Constructive Capital. Kyle Concannon is joining us today as the VP of product there. And we have seen you guys just explode in growth over the last few years. I remember talking to Ben Furtick, I think it was 5-6 years ago, when Constructive really was just starting to take off, and you guys have all elevated and continue to grow. And what's that been like the last year with just the amount of growth that you guys have experienced?
I mean, it's been awesome. Thank you, first of all, for having me. Excited to be here. But no, it's been awesome working at Constructive. So I actually started at kind of a key inflection point right before COVID. So it was like 2019. I had a background of being like a draw inspector, and an underwriter, and a portfolio manager, kind of in the private lending space. But Constructive was my first opportunity to jump into sales. And that was right before COVID, right? So I was making like my first couple cold calls right before the epidemic broke out. So, obviously COVID happened, but then rates almost go to zero, or in our DSCR world, rates go to like 4%. And it was boom times. So that was a great run. Really easy to make money back then. It's gotten a little more tight as we've gotten higher rates. But, over this last year, specifically, what kind of happened is, me and the two other VPs at Constructive, Ben Jackson and Michael Fuller, we had an opportunity to step up into more of a leadership role and a management role. We've always been, top producers at the company, but we had an opportunity with some vacancies to kind of step up, rebuild the company in our own image, maybe do some things that we've always wanted to do. So with the three of us kind of leading the sales team, we've had a lot of success with that. Mainly listen to clients, getting their feedback, but just doing the basics right, calling people back, going to their office, getting in front of them, going to all the conferences, stuff like that. So it's been an exciting year, and we still have a ton of growth ahead of us.
That's awesome. For all of you out there in kind of our ecosystem, if you don't know what Constructive is, I'll let Kyle kind of give you a brief overview, and then I want to tie it back to why that matters to you guys here in just a second. But Kyle, can you just give us a brief overview of what Constructive is?
Yeah, Constructive is a capital provider. So we're in the private lending space. So we're talking DSCR capital for rentals. We're talking fix and flip. We're talking new construction, or maybe you have a portfolio loan with multiple DSCR rental loans. But we're a capital provider for mortgage brokers and private lenders in our space. So we're in the background. The borrower, doesn't necessarily see the word Constructive, and that's by design. But we're supporting our brokers. We're helping them grow their business, which is really exciting. Like, it's very entrepreneurial, right? Some of us have really big clients that are established and have a big name in the space already, but there's other clients who are just getting started out. They want to work for themselves. Maybe it's a family business. Maybe it's a dad, a son, and a sister are all running the business. They don't want to go work for some big lender. They want to start their own thing. So I think that's awesome. I think there's a lot of self-starting and entrepreneurial motivation there to go out there on your own and start your own business. So we are supporting the mortgage brokers and the private lenders in our space build their own brand, scale their business, put their name on the door. Maybe it's their family legacy that they're doing. So Constructive is made up of hundreds of these brokers across the country, and our success is built on their success. We need to make them look good on a daily basis. And, the borrowers will close, they'll be happy, and they come back to our brokers again for repeat business. That's the key, right? Is the referral business and the repeat. So that's what we're focused on. Yes, we're in sales, but really what we're in the business of is supporting our broker clients and making sure their clients, the borrowers, have a good experience.
Yeah, that's great. So if you're sitting here and you're listening and you're saying, well, why does that pertain to me as a real estate investor? Let me explain something to the listener right now, is that many of you got into this space by wholesaling houses. And for the last 3 to 4 years, what I've been kind of pushing and been a proponent of is actually learning how to wholesale money. Like to actually, I think wholesaling houses is one of the most difficult things in the world. And we kind of tell everybody like, oh, that's the pathway in. And you got to go find a distressed seller, and you got to find some guy that's going to beat you up on price on the other side. And you're in the middle trying to make these deals work, where it changes the entire dynamic if you're a broker of private money and you walk into a room and say, hey, I've got the capital to fund your deal. All of a sudden your date card is full. And it's a whole lot easier to wholesale money than it is to wholesale properties. So if you have access and you're on Main Street doing deals, a partner like Constructive can come behind you and help you actually broker loans. And there is a piece of that you can take. There's a margin in there that's already built in for brokers. And so if you're a real estate investor, one of the things, the verticals that you might consider adding this year, you already know the space, you already know the deals, you already know the structures, that getting into private money brokering or lending is a really great graduation step in your real estate investing career. So Kyle, as like we have some of these people that are kind of moving into the brokerage space where they've been a real estate investor for 10, 15 years and they've found a lot of success, but now they're transitioning in and they're adding additional pieces or verticals to their kind of offering. How hard is it to get to a place where you can broker money? Is it a difficult step? Do you guys offer support in that?
We do, right? So we have the whole spectrum of clients. Maybe they're a successful real estate investor already. They have 10 doors, 20 doors already, but people will come to them and ask them for money, even though maybe they're a flipper or they're a contractor. If they're building their business, other people will take notice and then maybe come to them asking, hey, can you help me with my investment property? So absolutely, yes, you can do that. But I've said for a long time, like our little private lending space is like one of the best kept secrets in this country. Because think about it, if you're a wholesaler, if you're wholesaling properties, okay, fine, 2008, 2009, there's plenty of inventory for you to work on. Yeah. But now no one's selling their house, right? You got that lock-in effect. People are not moving. But there's low inventory. So it'd be really hard to make it as a wholesaler right now. Or maybe you're a real estate agent, right? Again, same problem. Lock-in effect, there's less inventory, there's fewer deals and more brokers that are fighting over that commission. But you flip to the private lending space, the investors are like a shark, right? They're always moving. They have to be doing something. They're buying their next flip. They're refining out of their current flip into a rental loan. So it's a lot easier to make a living in our space doing that because the investors have to do something. So that's where we come in. We're giving them reliable, stable capital for either a fix and flip or a DSCR rental. And yeah, if you're an entrepreneur, maybe you're already a flipper, so you already have that bloodline. This is a natural fit, right? Because you're starting your own business, you're being scrappy, you're not afraid to pick up the phone call, talk to people, go do a cold call, go jump in front of someone in person. But there's still a ton of opportunity there. So it's almost a natural fit. If you're doing something already entrepreneurial, yes, you can transition into be a mortgage broker with Constructive for sure.
And we're seeing lots of people migrate that way, mainly because they already have the fundamental principles. They already understand deal structure. They already understand budgeting. They already understand what it takes to make a house perform. They already understand the management of the asset. And so we're seeing a lot of people naturally migrate that way because there is a living to be made over there and a very good one. But so for Constructive, I think I get this question all the time, and I like to ask the question to you, is that there seems to be just a ton of liquidity for private lenders, lots of capital just like ready to deploy. Do you see that tightening up at all in the near future? Do you see still this kind of like free flow of capital into these hard assets, on for the foreseeable future? I mean, like, what does the market itself look like? And do you see a tightening coming, or do you see, the bigger capital, the institutional capital starting to pull back at all?
No, I don't. I could see the borrowers maybe pausing or hesitating if they think rates are going to go lower. Like if they think their interest rate on their next DSCR loan is going to be a lot lower, maybe they wait and sit on the sidelines. And we saw a lot of that last year. I think to
Mhm.
start this year, people are a little more realistic. Like, okay, rates kind of are where they are. If anything, they might go up a little bit as far as the borrower's point of view. But from the investor's point of view, the entity that buys these loans after constructive closes them, we have an attractive product for them, right? Because we are selling a DSCR loan. Maybe the rate is 6, 7, 8% with a 5-year prepay attached to it, right? So the investors, they will buy as many of those as they possibly can, right? Because the alternatives are, okay, you go buy T-bill, right? And you're getting like 3.8%.
Right.
So our 30-year loans are very attractive to them. So yeah, there's still a lot of institutional capital, Wall Street money, life insurance money, and it's still a growing industry. So I think they're a valuable partner, the capital sources, and the more loans we do, the more efficient we get. We pass all those savings on to the end borrower.
Yeah. I saw a recent stat published, and it was on the NASDAQ site that said that there's essentially $430 billion worth of liquidity that is essentially earmarked for private lending that's intended for hard assets. And it's like that's a lot of liquidity. But the funny thing is I think if you could deploy 430 billion, there's probably another 430 billion on the
Yeah,
backside of that.
right.
Because if it's getting yield, the capital will still flow that direction, you know? Well, that's great. So, generally speaking, just the market itself, what are you seeing right now? I mean, obviously, we've had low inventory for a long time. We just had an election that does, affect whether it's like pent up demand or pent up properties now seem to be kind of coming into the market now. What do you see in just general sense in the economic marketplace for real estate and real estate investing?
Yeah, I mean, regardless of your political views, I think a business-friendly climate is good for our industry, right? Because we're made up of entrepreneurs that want to go flip a house or start a business or start a mortgage company. So all of that is good, like less regulation and more building. As far as like the big picture, like housing crisis, I think one of the only ways we get out of that is by building more units on a yearly basis. I think we're like 3 or 4 million houses behind compared to what is actually needed. So yeah, you got the big home builders out there that will fill some of that gap, but a lot of it is going to be an investor, a private real estate investor who maybe goes to Constructive or goes to one of our mortgage clients. And they're going out there to build a house. They're going out there to flip something that's dilapidated that no one would want to live in or rent right now. They're going out there, they're putting in the grunt work, they're fixing it up, they're turning it into a rental, or maybe they're building a brand new construction property. But I think more units is really the only way to solve that problem. Lower rates will help, but maybe that just spurs demand, and if we end up with the same issue. Really, what we need is more places for people to live. So we're right in the middle of that. Private lenders, mortgage brokers, Constructive, our whole industry is right in the middle of that, where we can enable that problem to be solved by offering people access to capital, so they can go out and do that next investment. And then, the borrower benefits as an investment, but also there's either a tenant or a homeowner on the other end of that who is getting a nice new property to live in.
Yeah. Yeah, and there's something to be said about the amount of baby boomers that'll be leaving their residence. I mean, we've been talking about it for 10 years now, but it seems like with COVID and everything else, rates staying low, and now you have a baby boomer who's locked in at 3.5%, and they don't want to leave their house, stuff like that. It seems like that's finally starting to break. And I read a stat that somewhere in the neighborhood of 15 million baby boomers will leave their place of residence in the next 7 to 10 years. So, I don't know about you, but when I go to families' houses, at Christmas time, there's still a lot of floral wallpaper, toilets, stuff like that. Like all of that's
Right,
going to
right,
have to be
right.
brought back to standard, because a Gen Z is not going to come in if they save their money to put a down payment on a house. They're not going to want, floral wallpaper and pink toilets, like they're going to want something that's at least at the standard that they were used to. And most of them are living in Class A apartment buildings right now, with granite countertops and
Mhm.
decent amenities. So yeah, it seems like there's a lot that's still moving in the marketplace, and obviously we still have, like you said, we're 3-4 million homes, depending on who you listen to, underbuilt right now, and just not enough new housing inventory going up. Do you see that private lending will play a big role in new construction? I know that if you were to come into AAPL, the American Association of Private Lenders, 5 years ago, you were hard pressed to find a lender that was willing to do new construction. Now it seems like everyone does new construction.
Mhm.
Is that because of the demand? Because there's just not enough housing inventory?
Yeah, we gotta dig ourselves out of that $3-4 million hole. But also like the lock-in effect again. Like there's not that many existing houses to go out there and rehab. Like yes, you can find them, but they're harder to find than they have been in the last couple of years. So that leaves the investor with, okay, I can overpay for an existing house. I need to rehab the whole thing. Maybe the numbers don't work at that point. Or there's these empty lots. And if I have experience, if you have enough experience to qualify for new construction, that could be an avenue. But either way, when the baby boomers finally move out and they go to their, single story ranch property with a bedroom on the first floor that they all want, right? The investor could either be building that house that the boomer wants to move into, or when it's empty, the investor can buy that property, rehab it to the standards that the Gen Z and the millennials want, and then we'll move into that house, right? So either way, there's opportunities for private investors to stay busy over the next couple of years.
Yeah. If someone is listening and they're interested in getting into brokering capital with Constructive, what's the pathway in? How do they get more information on that?
Yeah, super easy. Constructiveloans.com. There's a phone number that you can call. It'll go to one of the three VPs. So if you want to talk to us directly, call that number. It'll either go to me, Mr. Fuller, or Mr. Ben Jackson. So call that 188 number on the website. There's also, you can leave a note, send us an email, and we'll call you the next day. Because if you're in our space, we want to know you. We want to get to meet you. We want to get you signed up. But we're quick. So if you put in a request on our website, you're going to hear from us, tomorrow or the next day. But it's super easy. Sign up with us. Our job is to do a lot of training up front, right? So someone like me, I'll get a new client in the door, and it's my job on those first couple loans to do a lot of training, right? Here are our guidelines. Here's our rate sheet. Here's how the process works. There's no like hidden trap doors. We want people to know and have like a high degree of confidence going in. Like, I'm going to send this loan to Constructive and it's going to close because I have a great salesperson over there and they taught me everything I need to know. So that's kind of the goal. But it's a lot of training up front on those first couple of deals. But after that, after you do a couple of DSCR loans with us, you'll kind of see a lot of the processes, a lot of the conditions are repetitive by design. And you can kind of scale your business from there, right? So like a condition we ask for, maybe you build it into your process up front as the broker. You get it early on. So it's not even a condition of the conditional approval, right? So it's just like one less thing to do. So our job is to do a ton of training on those first couple of deals, but eventually get the broker, get the originator to a point where they can do almost everything on their own, put a whole file into the system on their own, understand the guidelines, understand how to price it. We're always there as a resource. They can always call us, email us, text us 24/7. But that is kind of how it is. We want to train everyone up front so they know what we're looking for, and then they can put in deals with confidence.
Great. Thank you. How can they reach out to you? Just go straight to the Constructive website, or is there social media? How would you like for them to reach out to you?
Yeah, find me on LinkedIn. I'm pretty active on LinkedIn. My email is kconcannon@cmwholesale.com. But again, I would go to the main website, put in your request. You'll get connected to someone with a lot of experience on our side to kind of start that journey.
Okay. Thanks, Cal. Appreciate it. Thanks for your time today.
All right. Thanks, Eddie. Appreciate it.
One more quick thank you to our sponsor of the podcast. This episode is brought to you by Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. That's realpropertymgt.com. Before we jump off the podcast, I want to invite you to our Think Realty Conference and Expo that's coming up in Phoenix, Arizona, March 27th. This is a show that you're not going to want to miss. It's going to be one of the best shows that we put on this entire year. We always put on great shows, but there's something special about this Phoenix one you want to be a part of. So don't miss your chance to learn, network, and make deals with some of the biggest names in real estate investing. For a limited time, you can actually get a buy one, get one free if you just go to thinkrealty.com/Phoenix. And you use the code podcast. If you use the code podcast, you can buy a ticket, get a free one for your friend or your spouse, and bring them along with you and make it a great day. It should be just an amazing day of learning and content, and you'll get just a lot of great information on what's going on in the marketplace and connections to people with deals and money and so on and so forth. It's going to be great. Always love speaking there and love being a part of that show, and I want to make sure that you make your plans now to be a part of it. We'd love to see you there. If you haven't already picked up your latest Think Realty magazine, you go to the shelves of Barnes & Noble, or you go to thinkrealty.com and you can actually get it delivered to your house. And we'd love to do that for you as well. So have a great day, and we'll talk to you soon.